What's up, guys? This is another look on the Bitcoin market, and let's try to see what the market wants to do. And I'll give scenarios, and yeah, and then you know what I will be doing at certain points if the market behaves in a certain manner. So basically, we are seeing this. This is the 4-hour time frame. You know, I do my analysis mostly on the daily time frame, right? This is the daily time frame. But if you really want to understand what's going on, now this is the daily time frame, so you understand the daily time frame. That's where I mostly do my analysis. So you know that the market is still in an uptrend from April. Okay, it has been in an uptrend, so it's still in an uptrend, and at this point it looks like the market is sort of consolidating. So it got here, came down, got here, came down, right? So it's more like it has been trading in a certain channel from May. The market has been trading in a certain channel, right? So let's go on the 4-hour time frame and see what's happening at this point. So basically this is what is happening on the market. So when the market got here, it gave a double top here and then came down. When it got here, it gave more like a pin bar and then went up, gave another double top, came down, and this more like swept liquidity. And then I've told you, if you are trading and then the market reacts in this way and breaches your boundary, let's say support or resistance, and then goes back into the space quickly, you take the trade. That is a liquidity sweep, and so you take the trade from here to here. So now let's say you took the trade from this side after the market broke, bounced, and then entered, and then you took the trade from this side, okay, and then you targeted this area. This is more like risk to reward 2.4 1 is to 2.4, right, which is a good win. And so basically it means that if you were putting $100 on this trade, if you are risking $100, you would have made, let's say, $240, which is not bad, right? So the market has touched this boundary. Okay, so if you are trading with this strategy of mine, you wait till the market touches any of the boundaries. So the market has touched this boundary and it sort of got rejected, right? So the first touch at this boundary, the market got rejected. So for me, what I'll be waiting for is a second touch, right? I'll want to wait for the market to come the second time. And so when it comes the second time and then gets rejected, then I'll take a trade from there and short the market to, let's say, 101. That's how I am going to trade. That's how I trade, right? So basically, I'll be waiting for a second bounce at this level. So the market can decide to come back and then break through and go up. But basically, that's what I'll be waiting for. And so, yeah, if you are trading with the Fibonacci replacement tool, you realize that, no, let's say at this point, right, the Fib retracement tool. So this was more like the market was in an uptrend. Okay, so this was more like higher high, higher. This is higher high and this is higher low. So you put it at the higher low, and then you realize that indeed at the points of the this is called the golden pocket, the Fibonacci golden pocket. So in the golden pocket between the 0.618 level and then the 0.5 level, the market has reacted. Okay, and so basically that's what I'll be looking forward to. I'm looking forward to a second bounce. So a second bounce can come and break through and go up, or when it gets here and then on the 4-hour time frame, it prints a reversal candle formation. And a reversal candle formation could be this, right? A bearish engulfing, right? Once you get a bearish engulfing, you know that the market is coming down, right? And then you just take the trade. Let me show you. So right here, you know, when the market got to this level, it printed a pin bar and then a bullish engulfing. And so this showed that the market was going back up. And indeed, the market went back up. right? So when it got to let's say at this level as well, when it got here, you know, this was more like a bearish engulfing, and then the second printed another sort of bearish engulfing, and then the market came down. And so basically, if you want to trade like this, that's all you need to do. You need to wait for the reaction on the levels, either the supports or the resistance. So I'm waiting. This is the first reaction. I'm waiting for the second reaction. If it gets rejected the second time, then the market is coming to 101. Okay, so you can decide to break through. So this is not the time to, if I don't know, if you are trading Bitcoin at this point, I don't know what you've seen, but based on my strategy, I am going to wait for a second bounce, right? So just keep it simple. That's all. If you want me to take a look at any markets, you can just comment in the comment box, and then yeah, I'll do that. If you want me to do analysis on any market, you can just do that, and then yeah, we go. Anyway, thank you for watching.